Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. Of course, we're going to keep talking about that rotation. It continued yesterday. Dennis did say at the end that he maybe was going to fade it. We're going to find out how he approached it in a moment here. Don't forget, we have a jobs number at 8:30, the February payrolls figure, so we're going to get to that as well. We'll cover some earnings. We had Costco after the close. Guest today, Jason Raznick at 8:45-ish, and then the CEO of Fubo. I mentioned that for the past couple of days now. The CEO of Fubo, David Gandler, will be on the show at 9 o'clock Eastern time. So big show for us today. Joel, bring up those charts and tell us how we are doing in the overnight trading session.
Oh, we got a nice old range. And, the buy the dippers came in a little late on Thursday. They continued overnight. We're back at the scene of the crime, folks. 37.80, last week's low. We are right there right now trading at the highs of the pre-market session. So let's hold on here. Maybe get into the 3,800 handle. I'd be looking at Wednesday's close at 38.1675. On the downside, it's not going to be so easy, folks. We're 60 points off that low. So I don't know. I think if you want to do some buying in the SPOOs, you're going to have to do it ahead of that pre-market low at 31.25. Crude, relentless move higher after some cuts, up $1.41 at 65.24. Gold loses 1,700. That's down 460 at 16.9610. Silver treading in the 25 handle, down 8 cents at 25.39. And Bitcoin under 50. Tight range, but we're down $255 at 48,000. Let's just call it 48,000 on the nose. Let's bring in Triple G, and I know I got in trouble for my tangents yesterday, but only one quick one today.
What do you got?
I got my first new clothing of the pandemic. Dana got me a shirt that I'm wearing right now. Oh, yeah. And I want to show it to everybody. Yep. Okay, can you see it?
Brady. Look at this.
See what it says?
We lost. I can't see the bottom of it. Super Bowl.
Yep.
Nice.
Tampa. Brady. Buccaneers.
I mean, that's the summary of the Super Bowl right there.
Is that a great shirt or what?
That's a great shirt. My buddy who's a big Bucs fan would love that.
Yeah. She got me the XL. It's a little tight, man. I better quit working out.
Unbelievable player. I mean, just the Brady. I just can't get over that. But anyways,
where'd he go? Michigan.
Why couldn't he come? Why couldn't Brady have come to the Lions and we could have won a Super Bowl? Why did he have to go to Tampa? He should have came back to Michigan, Joel, and it could have been a completely different story for the Lions because he's good enough to. Well, maybe not with Lions team.
Would you go to Florida?
Wishful thinking, but.
Would you go to Florida?
Yeah, but he could have came back home, Joel. Went to Michigan. Come back and help the Lions. We need help. Oh, the Lions.
Florida, Michigan. Florida,
Michigan. I struggle with the same thing with my NHL team. Why do you cheer for the Edmonton Oilers? They're up there in the tundra. No players want to go there unless they're forced to go there. So that's why your team's crappy all the time. Who wants to go where it's snowing 9 months of the year?
I agree.
I'm bringing us back.
Markets.
This is a bad tangent. Don't get me on sports. I hate sports.
I love sports.
All my teams suck.
Michigan beat Michigan State, clinched the Big Ten title yesterday. Yeah.
All right. Chat noting that I'm not wearing a red shirt today. That is true.
Yeah, especially with a red shirt yesterday, Dennis.
Bad decision.
Nice. I think I'm wearing the same shirt I wore yesterday.
This guy.
I'm like Groundhog Day. I don't leave the house. All I do is trade stocks and parent. That's my life. Parenting
right, people
and
are getting
trading
mad
stocks.
at us.
You want to know one more tangent before we start the show? But my wife had to run out to the grocery store quickly, so I've got the two kids. The 3-year-old and the 6-year-old are outside the door, and they're just watching TV. And I'm like, okay, I'm on the radio, so don't come in unless the house burns down. And my 3-year-old looks at me and says, "This house never burns down." Anyway, so cute, 3-year-old. But okay, tangents. Let's go.
Not yet. All right, so
stonks,
Dennis,
stonks.
You did say yesterday maybe that you'd be coming in and fading the rotation, fading the movement of value. How'd that work out for you?
I was lightening up into my long-term portfolio, yes. So I was selling banks yesterday. I don't know how it worked out because it's only one day. It's kind of been about the same.
Okay.
Where I've sold these stocks. Energy continues to go higher. So any energy you sold, you're having regrets. But I mean, again, I'm going to say the thing. So, I've been through, Joel too, if you've been around for a long time, you've been through a few bear markets, so you kind of know how they go. Are we in a bear market? It's still to be determined. Definitely in the small growth names we are, though. In the mega caps and the other stocks, no, absolutely not. So you have a tale of two markets here right now. If it starts to get ugly, and that's a big if, but if it starts to get ugly, what eventually portfolio managers start to do is they start to sell winners to raise cash. And I think you're going to eventually, if it continues to be ugly, the tech names, you could start to see a spillover. And we started to see it yesterday afternoon when you saw, Boeing, which I'm still long, but you saw a lot of those hiding the reopening trades coming off. NCLH, which was way up in the morning, got hammered all afternoon, came back at the end of the day. But you can clearly see that, hey, they started to spill over and started to sell everything yesterday afternoon. Now we've bounced back. It doesn't look as bad now. So, this market's starting to buy the energy stocks and the banks again, but it's all hiding. So rotation is still keeping us afloat. The question is, does that rotation continue to keep us afloat? We saw mega cap hold up very well. Or did the growth names come back? Maybe it's a bounce in the growth names. There's a lot of questions. I don't have the answers to that. Somebody on CNBC is going to say they know the answer. They're lying because nobody knows anything. We don't know. All we can do is take the information we are presented and then, draw up our own, and just trade what we see. So that's what I'm trading too. I'm trading, certain rotations. But at the same time, you've got to be aware that if you're hiding in energy, if you're hiding in retail, if you're hiding in consumer staples, if you're hiding there, if it really gets ugly, they'll hammer all that stuff too. I think that's still to come. But that's just my thoughts.
Nice bounce off the low. So we took out last week's low where, right now it doesn't look like we have the Friday end of the low close. But I think today's important. You got the jobs number, right? So there's some optimism there. But, you undercut that low from last week. You're trying to get above it. I think a close in the 3,800 handle would be a little bit more settling. If we, don't like the jobs number, we start losing it, we get down, we take out that low from yesterday, then I would definitely be a little bit, I'm like 25% bearish. I would go 50% bearish if that happened. But man, there's always, there's always the bounces. There's always ways to be nimble, play both sides of the market. I haven't done anything, as far as long-term stuff. Not nearly as nimble as you, Dennis, as far as wheeling in and out to try to stay fully invested. I have a lot of cash right now, but I always have a lot of cash. So there's it's, same scenario for me.
Yeah, well, I'm not sitting here liquidating my whole portfolio either. Don't kid yourself. Right. My long-term portfolio gets smacked around on days. I didn't sell any of my Amazon. I didn't sell any of my Apple. I didn't sell any of my Microsoft. I didn't sell any of my Google. I didn't sell my long-term Qs holding. I didn't sell my long-term SPY holding.
Right.
I sold some of those smaller growth names I've been selling into. I've been selling those for a week and a half. Every time we see some strength, not selling when we're down 500, when we're down 3% on the NASDAQ. I was using the rallies, and we talked about this yesterday, getting out of some of those smaller names, lightening up, and I'm still in a few of those names too. I don't want to be completely out of all that stuff. But the question is, everybody gets, what are you buying? What are you buying? What are you buying? It's just guilty until proven innocent right now, this market. So I'm not coming in here and trying to catch the falling knife. Some of these stocks were hammered. You're trying to buy NEO a week ago, 2 weeks ago, 60. Oh, it's 50 now. I want to buy it. Oh, it's 40 now. Oh, it's 39. And now it's 38. I mean, you got to kind of let them stop going down, let them base, let them stabilize, because we're going to have snapback rallies, and if you catch that, you just got lucky. But if you can get a setup where these stop going down, they start to stabilize, and then they start showing some life, that's where it gets interesting, because the technicals on all of those growth names are broken. And I don't know if the tech bubble burst or if this is just a correction in an overall, bull trend here still. But I can tell you that if I'm looking at a chart of Tesla, the Tesla trend is still there. 600 probably still there, the overall trend. The overall, if you go out to your weeklies, you can still see a clear uptrend here. So it's still intact. But there's some smaller names like Fastly. Well, that trend's clearly broken. Clearly broken. AYX, clearly broken. Almost arguably in a downtrend now, if I'm going out and looking at the last year and a half of data. Obviously Amazon stuff still in a clear uptrend, but looking like we're struggling. We're struggling a little bit here. So the market's technicals, at least on the tech stocks, are not that healthy. And that makes me a little less inclined to come in here and just catch the falling knife. I guess everybody got quiet all of a sudden.
Speechless, Dennis.
Those moments of silence, you got to cherish those moments of silence. When you have a 3-year-old and a 6-year-old at home, you get that moment of silence, you grab onto that, and you hold that moment as long as you can. So I appreciate that. I appreciate that.
All right, SP still hanging up here, up 12 and a quarter. It's 70. Let's call it 12 and a half. It's 78 even. Do we want to get earnings out of the way, or
real fast? Do either of you have any comments on the reaction to Jerome Powell and what he didn't really say anything new? I don't.
I know.
I guess that was the problem. I don't really know.
I thought he did say one statement, which I think was the spook of the market. Was that he said we can't let hyperinflation, we can't let inflation get out of control. I'm parsing the words but I read it, obviously, and I reread it afterwards. I heard it and I reread it. But he did talk about that they've seen high inflation environments. They're not good. They're not going to let that happen. So that's counter to what he was saying. We're not worried about inflation, because now he said, yeah, we're not worried about a little inflation, but if we got a lot of inflation, we would worry about that. So that's, I think spooked the market as well. So that's where this market is looking right now. We're looking to the Fed. Are they going to continue to just spike the Kool-Aid here? I think they're going to do their best. But if inflation gets out of control, the only way to really control inflation is rates. So, that's going to hammer stocks. So there's a balancing act here that the Fed is always doing. Mm-hmm. But that balancing act has kind of, fixed itself to a certain extent. But if he's going to worry about inflation, then the market's going to worry about the market.
Mentioned yesterday, I said, he's been saying, hey, raise forever. And I said, it's, the big thing is not going to be when they actually raise rates, but when he intuits that we may raise.
Right, exactly. Because right now he said it's not. Right now he's like, we're not even thinking about it, right? But when he says we're thinking about it, then we're off.
Yeah,
to the races. So,
but still, you see, this is where I get torn. Come on, rates go. Incrementally, rates going up. Are you really pulling your money out of the stock market to, go get, these low yielding? It's going to be a long time, man, before I even look at a CD or, come on. Are they even around anymore?
Let's do the economics lesson for
they're offering they're offering 1%.
Really, that much? Huh?
No, that was a joke.
Should we do the economics lesson just quickly here in the next minute for the newer listeners and that maybe didn't take an economics course? Interest rates hurt stocks the way Joel is talking, because higher interest rates will attract capital, meaning they pull it out of higher risk assets because they can put it in a safer asset and still get paid. So, you get interest rates of 5, 6, 7%. It's attractive. Long-term, markets, go up 7, 8% a year on average. Well, if you can get that 8% in a risk-free, but Joel's saying we're so far off of that, 2%, it's not really money going to fly out for that reason. The other thing is higher rates slow the economy down, because there's, the mass amounts of, the economy is built on borrowing capital. So you have businesses that borrow capital. So lower rates help those businesses, which in turn helps stock prices. So higher rates, less business, and then obviously translate into lower stock prices. That's the economics behind it. Now, again, we don't economists here. We don't want to be economists, but that's the concern with higher rates if you're new to the markets.
And also the effect on the debt with higher rates too, right?
Well, that's a whole other animal because we've never had debt like this with high interest rates. So I don't even know how you can't even service the debt at higher interest rates. That's a whole another can of worms, a huge can of worms. Peter Schiff and everybody arguing this. You can service the debt when you're paying 1% on all that. If you're paying 3, 4, 5% on 20, what is it? 28 trillion? What is it? I don't even know where it is.
I don't know. They used to have that little thing in the corner where
it's
just
going up, but they don't even worry about it now. It's just the hole so deep. It's never getting
out.
out.
I'll pull it up right now. National debt clock.
Yeah. I don't even want to know.
If it goes negative, if rates go negative, though, then we can start reducing our debt, right?
Yeah.
Where's the debt clock?
U.S. national debt, 28. I don't know what the number is.
I guess pretty well, 28 trillion.
I guess that's 28.
I guess
trillion.
Almost right on, $28 trillion.
Look at you.
Look at that thing climbing, man. Stop looking at it. I'm getting stressed out. We just lost 200 grand.
What do you mean?
Grand.
What do you mean? You're in Canada. This doesn't affect you.
Yeah, what's Canadian?
If you had a Canadian debt clock, see if you got a Canadian one, it probably looks similar. It's not that high per capita, but we got a lot of debt too. Don't kid yourself. The economy is built on debt. This is all over the world, unless you're in China, and they have a they got the surplus kicking every year.
Here's the Canadian.
The Canadian one. There we got it. What is that?
There's that 1 trillion.
Yeah, but we have like 10% of your population, so it's
yeah. All right.
Yeah, we don't have as much industry either. We sell. We got hockey and beer, and we got some lumber, but lumber
and
maple syrup. Right.
How are those maple syrup futures doing?
I don't know. I haven't looked at them lately.
All right,
got to top those trees.
Bringing it back here, we got 20 or so minutes till Jason Raznick. Let's cover some stocks, and then we'll go to some questions from the chat.
Ticker time.
You want to do
Ticker time already?
You want to do Costco?
Oh, let's do Costco.
Let's do Costco. Costco had earnings last night. Their earnings per share missed what was a pretty high estimate. The EPS was $2.14. The estimate was at $2.45. So again, that's a miss, but the estimate was I thought that was pretty high. Comps, Q2 comps, which is same store sales, which is essentially sales for Costco locations that have been open for at least a year, increased 13% year over year. E-commerce sales up 75% year over year. I don't see any guidance that they gave. Joel, you have the chart up.
The stock's in free fall still.
Yeah, look at that.
I know it's been ugly. I think at $300, I think I'll put this on my long-term account at $300. This is one that we're not far off from where I would actually try to call the bottom on Costco. It could go 280, 270. I think you're buying Costco under $300. I think you're going to make money. So Costco, awesome company, not going away. Works in a pandemic, works not in a pandemic. This company fires on all cylinders usually, except apparently this quarter. It's down a little bit. They're not hammering it. It's already been hammered pretty much, 390, So I don't know, $300. I like it. You own Costco?
I did own some just delicious lobster tails there that I got on Saturday. They were £1.50, Dennis.
How busy is the store when you go in there physically?
It was busy. Yeah, I mean, we dropped. Lisa said we're not spending $500, so we only spent $420. Man, the street just leading the right way into this report, leading the right way since January in this one. Yeah. I mean, every day a step down seller. I don't know if they're done yet, but I'd wait a day or two. You mentioned the 300 level. We're down. If we make a couple lows, even if it's not at 300, wherever it is, you get a bounce maybe because this thing. It wasn't that bad of a report. Lost $60 just this year alone, and that's even off the all-time high. So you are off the pre-market low. That looks around like 311.50. So I'd use that. But man, it's gonna be tough sledding. They had a little pop. They stuffed that out right away. 311 pre-market low. You look like 315.5. The rebound high off that. Those are the early numbers.
300 I like. Next.
Yeah, I don't think you'll see it today.
No, I don't know. But I put your long-term order out there. You never know.
Yep.
I threw a rocket order out there to buy too if you want to penny jump me. I think I put it at $21 if it ever gets back down there. Long-term GTC. Good till canceled. $21, I rebuy my rocket. After all that stuff.
After it goes to 40.
It's 27. Yeah, I know. I missed the run. I'll come buy the dip on it now if it gets back near that support.
Okay.
Somebody asked, I'm still long Zynga. Yes, I am. I thought about buying more Zynga on the pullback. I have a large position in it. I was going to get it even bigger at 10. Didn't quite get there. I think it gets back down to $10. I think Zynga could still come into play here yet, as in could be a takeover candidate. So, especially with Glue Mobile getting bought, I like Zynga. And also, I like Michael Pachter, who said he likes Zynga with a capital, or L or capital Z. I'm not sure they like capital letter use, but... Okay.
Capital letter. Yes. He likes with a capital letter. All right.
Yes.
There's a couple more stocks on our list, but nothing that I felt was super urgent.
Palantir, they want to talk.
I know. I was gonna go to the chat
every day.
We should have a. Do you have something for a Kathy Wood segment?
Yeah, like get the Kathy pop up.
No, we should make one.
Sound effects.
We should make one.
Let's think of a song. Let's collectively think of a song that has like.
Right now.
Yeah.
This is a hard thing to just
No. I veto the right now thing.
Yeah, I veto it too. Okay, so I'll let Joel can think about it in the background while I get my technicals.
All right, what did Kathy Wood, what did ARK do yesterday? 57.
She buys the same stocks every day.
Yes, 57 transactions, 37 buys, 20 sells.
Yeah.
There's really nothing new. But that being said, Dennis and I have both been reading about, I guess, what is a growing murmur, short ARK murmur, or risk factor, really, in that ARK Invest, because of the inflows, the massive amount of inflows into their funds, has gotten so big, and Dennis can explain this more, has gotten so big in a number of smaller growth companies that, I guess, should ARK ever face a situation where they get a lot of redemptions, a lot of outflows, and by a lot, I mean more than a day. It would have to be like prolonged outflows over a week or weeks. Then they may be in trouble because the liquidity may not necessarily be there in these smaller stocks. Is that what you've seen as well, Dennis?
Yeah, I'm trying to just bring it up right now. I think it was Peter Chur that was. I'm not.
I didn't see it from. I've seen it from a few people who are saying.
Okay, so they're bouncing around. So the argument here, I'm not sure if it was Peter or not. I've had Peter on the show. Great guy, smart guy. I don't know if it was Peter, but I was reading something from Peter Chur, so it might be from him, might not. But I just want to say I think it was from him. He was just talking about we saw stuff like this happen back during the oil bubble, where we had a huge hedge fund manager that was buying speculative oil names. When oil went to $147, they were buying up all these speculative smaller oil stocks and piling in, and the fund was just kicking ass and taking names because oil was going up, and those stocks have high betas on oil, so they're going up 3 times more than oil. So he's loading up, and then the oil bubble burst, and he's trying to liquidate all of these oil stocks, but he's buying these things at high valuations. Oil's going down, so they're going down twice as hard, and there's no buyers. So, and then people are coming in and having redemptions because they want to get out. I want to get out. So he's got to raise cash, and he's got to be now selling all of these oil stocks, these smaller speculative oil names, into markets that have really no buyers, very few buyers. So he's driving the price down, just trying to meet his redemptions. So the argument was, could Kathy get into a situation where she's so big into some of these smaller names? This is my argument. This is what I was reading, what Spencer was reading. Could she get into a situation if the market really got ugly, and if we really started hammering some of these growth names, and if she actually started getting redemptions, which she hasn't even really been getting much redemptions, I don't think yet. But if people started to get spooked and say, look, this isn't working, I want my money back out, she'd have to sell stocks. And if she gets into a situation where she's got to start selling some of those smaller names, her price impact from her selling, because she is so large in some of these names, could be substantial, meaning, she could be trying to sell, think about trying to sell a pile of VU Zebra I, a pile of CMLF. These aren't thick stocks. I mean, these stocks have been absolutely hammered already. I mean, it's $25 3 days ago. It's $14 this morning. So, these are stocks that she's got large holdings in. Not super large, but of their percentage, she's got a big chunk of, she owns when she's buying a big chunk of that, she's a big player in that stock. So for her to get out, is going to be difficult. Now we're not even close to that situation. We're not even in the realm. We're just outlining the piece was just outlining scenarios that could potentially happen if it really started to get ugly. I don't think that's going to happen. I don't think we're in this market environment where everything's going to crash and burn. I'm not. Do I think the tech bubble and the growth names popped? Yeah, I do, and some of the growth names, but it hasn't popped in a lot of other stocks. So I don't think we're in this huge bear market here yet, so to speak. But we are in certain stocks. So, I mean, obviously Kathy's very good. She knows her stuff. And I'm sure she's got some contingency plans, if, she gets into trouble. I'm sure she's got big money in liquid names as well, even Tesla. Tesla's fairly liquid. I mean, she's probably, I'm not trying to spook everybody here. We're just trying to, Spencer brought it up, and that was the argument. So I'm on the fence there. I don't know. I'm not with, I don't invest in ARK for the simple reason is that I don't like paying extreme multiples for growth, because in a bear market, it gets ugly in a hurry, and that's why you've seen ARK come off so substantially. But it works really well in a bull market. So if you think the bull market's going to continue, if you think we're taking off to S&P 5,000, 6,000, Cathie Wood stocks will lead the way. These stocks will take off, and ARK would be a good buy on the dip if you think that. I don't know what I think about the overall market here right now, but I just know when I invested in high growth names back in 1999, 2000, eventually I got hammered in March of 2000 and 2001. So I learned the hard way that I kind of like growth at a reasonable price, not growth at any price.
So what Dennis basically just said is he's not buying ARK, is what he said right now. He's not chasing it.
I will probably never buy ARK funds for the simple reason that it's what we're seeing right now. It's the growth at any cost. I think it comes to roost eventually. I don't think you can just pay any price for growth and not eventually get punished. It works really well in an up tape. But you're seeing a small taste of it right now in the last 7-8 days that, whoa, these things can really get hit hard if we move out of a growth environment. I'm always more of a value guy, though. I'm a more Warren Buffett approach. I know it's boring, but I like to sleep at night. I don't like my portfolio going down 20% in a week.
So let me give you my perspective, because I've been long the ARKW for a year. I bought it when we were on the way down, or maybe we were on, I forget, somewhere around the bottom. Not exact, but somewhere around the bottom in March is when I bought the ARKW. And everyone's got to have their own uncle point, right? So I've got my uncle point in mind. If basically I lose 50% of my gains, then I'm going to start lightening up.
Whoa,
potentially. But until
point.
What?
That's a large uncle point.
Well, yeah, because it's you got to give
50% of your gains, not 50% of your capital. 50% of your gains.
Yes.
Okay, I thought you said 50% of your capital.
No.
50% of your gains. Okay, that makes sense.
No. But that's still a big number. But you got to give growth a little room to a little room to breathe. So,
yeah,
but if you're like me, and you're up you're up 100% or more in these ARK funds. You got to start thinking about
Dennis,
this, right?
2 minutes to the jobs number.
Thank you, Joel.
Yeah,
okay,
I just canceled. I actually already canceled my orders.
Okay,
I'm not sitting out there for this one.
I hope we don't get in trouble for this, but here we go.
Wait, Joel, you got to share your screen. Oh God, what are we doing?
I'm scared.
Here? Joel, what are we doing? What is this? Joel, I can't hear it.
You can't?
No, we can't hear it.
What are we doing?
All right, I'm taking that off.
Knock on wood.
Joel.
No, I don't know what that. I don't know what that is. We can't hear it. Doesn't matter.
Why not?
Tell us what it was now.
Oh, it's knock on wood.
Like, is it a song?
Yeah.
I guess it's a
song. That would have been fun.
All right.
He's trying to find the theme song for Kathy.
I told you to check
He's trying to find the theme song for Kathy.
Hold on.
I told you to check the box. The box.
Oh, you did. Oh, you did. Spencer gave me all the right directions. Let me do it one more time.
Well, while that's going on, everyone, non-farm payroll is expected to rise 210,000 from January. Unemployment rate expected to stay the same at 6.3%. Let me get my news feed up here so I can, watch this number as it comes in.
I'll just do it for just 1 second.
I just bought stocks.
Wait a minute. That just came in? Okay, we gained 379,000 jobs last quarter. All right, or last month. Big increase. Again, 200 non-farm payrolls was the estimate, a $200,000 job gain, and we instead gained 379,000 jobs last month. Good number on the non-farm payrolls. What do I have for?
I bought that dip. I don't know if it's good or not, but I bought that. I got hammered on that. Well, not hammered, but they were hitting my bids on that dip.
Big beat on that jobs number.
I threw 15 points. I threw my number 50 or $1.50 down on SPY.
Unemployment rate down to 6.2%.
It's coming right back there, Dennis. It's coming right back there.
Unemployment rate down to 6.2% versus 6.3% estimate. So getting a little better there. Big jobs beat. Nice job.
Okay, so yeah. So anyways, I was actually short going into that report, so I was just basically covering is what I just did. So I'm flat and neutral now. But yeah, I mean this market is tough. So it's trying to find reasons to sell. I was like getting hit pretty good there when we were up 10 handles there because I was short the market, and so now I'm flat and covered. I covered it. Obviously, we're going to continue lower here, but anyways, interesting market.
Yeah. We were just floating up, and they whacked it pretty good. So I mean, it's the initial reaction is down. Now you're a ways from that pre-market high 82.50. So I think you're going to have to find an intermediate level here. And right now, I'm just going to be concentrating on the close. That's 65.5. If we get the longer it takes for us to get back over there, probably bounce around like a ping pong ball. But right now,
that's what we like to
after that plunge, we got to get green here and stay green. And right now, it is a struggle. So let's see. I think that little blip was 59.75. So right now, keeping a close eye on that closing price of 65.5.
We lost 20 handles.
Yeah, we did.
That was a good hit.
And I'm so upset. I had the Kathy Wood Knock on Wood song all queued up. And Spencer told me exactly what to do, and I didn't do it. It was too close to the jobs number. Anyways, we just lost 37.60 here, folks. And not liking what I'm seeing. I'd like to see us get back up to the close. And I don't know. I don't know if we're going to see that. So here we are. Nice day. Had a nice day going on the green side, and now we're in the red.
I know nothing.
Nobody know nothing.
I know nothing. So, I mean, let's let this digest. Let's see what happens here.
It's digesting, Dennis, and they're selling. I don't think we're going green.
I don't know what to say. I'm market neutral. I am market neutral. I'm not short the market anymore. I was short coming in, and I was getting hammered a little bit. I covered. I'm market neutral right now. We'll see what happens. On my trades. Obviously, I'm always invested. We know I've raised a lot of cash. I don't know if I was asking Twitter. I don't know if we're in this. Why do I hear myself?
Yeah, I'm working on that. I don't know why we're hearing that go. Okay, maybe it's Joel. Wait,
what I do?
Direction. Well, this is something bigger. So that's why I raise cash.
Here, let me try something real fast.
Let me stop sharing. Maybe I still have the audio click, the double thing here. Let me reshare and then unclick.
I hear myself. Okay, I don't want to hear myself anymore. So
right. I think I fixed it.
One Dennis is enough. Two Dennises, you can't handle two Dennises.
Yeah. So. All right. 8:34. We've got Jason on in a couple of minutes. Let's do some tickers from the chat. I saw PJ was mentioning GrowGen earlier. And let's look at GRWG.
I'll look at this for a while.
Yeah, came off.
This looks broken too. This is a growth name. It goes right in that high growth, high multiple stocks. If you're looking at the trend and you take your Jeff Mackey purple crayon, it's broken. Trend is broken. So you lose what happens is, this is what happens when you lose, the momentum. You lose the Momo guys, and the value guys like me. I'm a momentum trader, but a value investor. And the investor side of me says, no, maybe you're coming at like 20. So then you're into this vacuum. I call it the vacuum, and we haven't talked about this for a while because I haven't been in a bear market for a while. But you have the growth. Everybody, Momo guys in. Momo guys start to get out, and they need people to sell to. Well, the value guys are way down here. So if Momo guys need to get out, and the value guys are way down here, you got to find other, players in there to sell to. And it's difficult. There's that huge gap because people that are value investors aren't paying 50 times sales for Snowflake. So that's why those stocks continue to get hammered, because you don't have that floor. We always talk about, on other stocks, they have like dividend protection, on AT&T and Verizon, they only go so low to a certain extent, obviously, as long as the dividends are safe, because you have different types of investors that will come in and buy those stocks. Even with Apple and Amazon, there's valuations here that are okay. Facebook, it's only trading like 19 times. So, that's why why does Facebook not go down right now? Because we're in a value market right now. We're in this value market, and those stocks are holding up okay. Even though if it's a tech stock, it's a value tech stock. So it's going to hold up better. But Snowflake trading whatever it was, 50 times sales, Zoom trading whatever it was, 30 or 40 times sales, those stocks get hit the worst because there's no other players that are going to come in when the going gets tough. The Momo guys get out because momentum's gone, and the value guys say no thank you. And that's when you have a lack of buyers, and you can see it whoosh through levels very, very quickly. And that's what's happened with Snowflake, and that's what's happened with a lot of these growth names here, because it's cooled off. Growth has cooled off, at least temporarily.
If you're hanging in here on the GRWG, what I could tell you is your January low was 37.71. Your low so far in this month is 37.70. 2 monthly lows in the same area. You're trading down to $1.97. I don't know if that's just some crazy prints going off or some actual, but right there. I mean, if you're trying to pick a bottom in here, you absolutely have to keep an eye on 37.70. Things whooping up way down to the $30 level. So that's what I'm picking. Currently trading 38.08. So it's also going to be the third time down. And there's no such thing as a triple bottom. It just looks like there's some scatty trading in it. It doesn't look anything. So that's what I'm looking at. I agree with you on the trend being broken, the valuation. I'm just trying to give some people in it some technical hope.
All right, so we got distracted and we never actually got to Palantir. Do you guys want to go back to that?
Yeah, it's quiet. Sure. It's quiet. I wouldn't want to be shorted here necessarily, and I'm not really thrilled about being long it. I say if I had to pick a position with all this support in this area, oh man, maybe give it to under 22, give yourself some room, but it's just heavy. It's not. Did Kathy buy it yesterday again too? Or not?
I don't know if she bought. I don't think she bought yesterday.
She did not.
But think about how many Kathy Wood buys have propped this thing up, and it still keeps going down. So you can say, oh, we're holding nicely, but there has been so many artificial pops in here from Kathy Wood that this isn't healthy for that reason. So you can look at a chart, you can analyze the chart, but when you look at it and think and throw a little bit of the fundies in there, and throw a little bit of even the order flow situation in there, she's been buying. That's put upward pressure on. And then all the Palantir chasers, the Kathy Wood chasers have been buying too. And the stock is still going down. So that's telling you there's a lot of other people who, are very nervous about this stock. The valuation's not good. It's not cheap. So I don't know. I can't get on board with Palantir here. It is good that it's stabilized and it doesn't look as ugly as some of these other charts. I mean, it's still down, a week and a half from 37 to 24, so it's still pretty ugly, but it's stabilized in the last 5-6 days. Kathy Wood is the reason this is stabilized to a certain extent. If the Kathy Wood buyers eventually stop buying, there could be just sellers left. So it's hard to get bullish here, Palantir. I will say if you are trying it, 2270 would be my break point. So if you're trying, you're saying, okay, I'm going to risk $1. If it takes out the low, then I'm fine with that. You've got a stabilization, you've got a trend, you've got an out. But when you're buying these high growth names, have yourself a level, have yourself an out where you're an uncle point, what Spencer was just saying. My uncle point on Palantir, if I was buying at 23.93 right now, would be 22.70. So you could do that, and that's fine. It's going to make some money.
Or you could say, you know what, this thing is weak. There's sellers in
That's
here.
what I said.
And there's, show me you can clear 26. Show me the money. Show me you can clear that 4-day high at 590, the 3-day high at 559. Yesterday's high was right, just below that area. But show me, it almost would be like, show me you can hold 26 and I'll lean on the 2270 low. Yeah. Right now, you're not showing me anything down 72 cents at 24.01, and yesterday's low way down at 23.05. So, maybe trying to buy that straight. Dennis was right in buying the dip once again. We went red, now we're green by just a few handles here. So, chop suey in the 37.60 handle, back green on the session.
I'm glad I got covered on that dip. I'm glad for the dip.
You did.
If we would have ripped higher, I'd have been like, it would have been a tough day.
Everyone's talking about bond yields going up. The TNX, TLT's going down.
TLT's getting hit again. Banks are blasting off. JP Morgan up $2.50. I am long bet JP Morgan, full disclosure, just as an overnight trade, and I have it hedged off, so I'll take that off after the open. But Goldman's up $4.70. The banks are strong, really strong here this morning. So this is after. They were strong before the jobs number. They're stronger after. So banks and energy continue to be strong here. That trend continues to go. Like I said, my longer-term portfolio, I've been lightening up into this. I lighten up into strength. That's the way I trade the longer-term portfolio. When I get nervous about it too, I'm not going to sell my, I don't have the growth names to sell. I sold them all last week. So I'm looking at what hasn't been smacked around, and I'm lightening some of that stuff up because I'm worried that stuff could eventually get smacked around. I might be wrong. Maybe the energy is just going to continue up, but I never had any energy stocks, so I haven't participated at all in the energy market. I don't like energy. So I haven't participated at all in this up market in energy.
What is a symbol for Flagstar Bank?
FBC.
What?
Okay.
That's random.
No, I own that bank, so I just.
Oh, you got that one. That's a thin one. That's a really thin one. Oh, I had a rough day yesterday. What happened to Flagstar yesterday? It's taken off. It's $49. Did it have earnings or something? That was a big, ugly reversal there, Joel, on that one.
Whatever.
Joel's long term.
I don't know anything.
Let's keep doing some more tickers till Jason comes on.
Yeah, let's do. And also, guys, smash that like button. We've got several thousand viewers, and
do we make new highs now?
Yeah, we did.
Holy, this market.
Buy the dip.
Can't stop, won't stop.
Yeah, look
Buy the dip. Works again.
Back above yesterday's low. Or back above last week's low, excuse me.
Show that in. What is that pre-market chart on the SPOOs? Let's just see what we did there, because I was bidding 15 points, like $1.50 down on SPY, which is equivalent to 15 points on the S&P futures, and I got hammered within about 5 seconds of that.
Where'd you get done at 76 or something?
376 and a half, I think. So 376, but I went below that. It went down to 375 and change on that candle. So.
Yeah, 75.40, but what about trying to buy 76 on the way back up? It's 76 and a half on the way back up.
The reason I was bidding out there is because it was short. This is what I say all the time. Shorts help the market because they're the people who aren't scared to buy. I needed to cover. So I get my order out there, and if I'm going to get a whipsaw jobs number, it might get me out of a bad short. And it did. It allowed me out. Being short coming in today was not the call. We were up. It was the call overnight. It was working until, somewhere 2 or 3 in the morning when we decided we were going to go green. Maybe it was Europe, I don't know why, or maybe it's just a bounce back. But coming in, I came in short, and it was not the call. So I was scrambling around. So we get that big jobs number that just bailed me out of my short. So I use those numbers as whipsaw events sometimes to get myself out of a bad trade. It worked out that way.
Also, less liquidity. So you're providing liquidity. Your evil order out there providing liquidity.
Oh, and there's other people who are probably short. And, those are maybe what causes to come back up, is there was some people banking on the short side coming in. Here was an ugly tape last night. So I guarantee you there's a few traders out there who were short this market coming in. And they're scrambling around. And those people probably are the people who are buying us back originally. And then you get more people. And then you get the FOMO going. And then, that's how the rallies start. Basically, when you're in the gutter and the market's really weak, the real turnaround is usually caused by shorts covering. And then that's bringing buyers into the market. And then that brings more buyers into the market. So that's why I say if you take shorting out of the market, you don't have that underneath buyer that's eventually going to be willing to step in and catch a falling knife. A short is willing to catch a falling knife because they're booking their profits. So they're your first buyer that comes in, and then other buyers, beget more buyers. So that's why you need shorting in the market, for the simple reason that when you get them, one, it keeps bubbles in check, but two, when the market gets ugly, those are your first buyers that come in.
Guess what made a 33-month high yesterday?
No idea.
33-month high.
And I don't even know.
It's a random number.
I don't know what well, I looked. I didn't want to put 3-year high in my article because it wasn't a 3-year high.
What is it?
GE.
Oh yeah.
And you know what? GE was getting CNBC love like crazy the night before. So we had Tim Seymour pitch the stock. We love Tim Seymour.
Okay.
He's been on our show lots of times. He pitched it, and the stock was ripping higher on that pitch. People wanted an excuse to buy GE, and then Tim's on CNBC, and then everybody else on CNBC. Karen liked it. Guy liked it, and Grasso, whatever Grasso says. I mean, I don't know why they've decided that Steve Grasso is the man, but I mean, Grasso moves stocks so much. Fast money. He's the one that everybody's decided knows the most. And he's had some great stock picks. And Grasso, we love you too. I don't think we've ever had Grasso on the show. Maybe he's got I don't know if we can. Some of these guys have relationships with CNBC that they can't go on other media. But you know, Grasso would be a good one to get on too. But he's influential. He says, I like this stock, and it blasts off. And he's been right. He had the Capri one. So anyways, but he said he liked it too, GE, and he thought it could go to 18. So when all those people get on board and all those people are pumping it, the stock goes up. It gets hit yesterday because the overall market got hit, but it's not surprising that this one's one of the first ones to snap back because there's people who have that underneath demand that are watched a lot. CNBC sees a lot of people, a lot of viewers there. So it's not surprising that one snaps back.
And you know what else? Morgan Stanley went to a street high price target of 17 on it yesterday. So they wiped out it wasn't an upgrade. They maintained their overweight, but they went to 17, cleared out the sellers at 14. And then, you haven't been up at 14 in 33 months. You get to 14, 13, and then the market turned around. So that was the reason for the sell-off. You got the gap fill, and GE is fighting its way back. But boring stock, we haven't mentioned. Maybe I'll track down Mr. Inch. We haven't talked to him in a while. Get his thoughts.
He's going to get bullish. When he gets bullish, I'll get bullish.
S&P futures. Oh, we're ripping. We're calling for 38.
The buyers win again. Jason Raznick. Look, we got the same shirt, man. Same shirt. There we go. He's copying off me.
You got Spencer to turn off. Nice. How'd I do that? That's like magic. I join, he goes away. That is great. So we got some issues with the 10-year bond, guys. 10-year bond, 162. Good jobs report numbers like that. I had some, Dennis, in this malaise of a week, I had a huge winner.
What'd you get?
It wasn't my pick, though. I'll be honest. It was this Viv, the biotech lady, KMPH.
I saw that one. Had good numbers.
It went up 80,
on their trials.
Yeah, it went up like 80%.
Did you get out?
And I had it, yeah. I mean, I didn't keep all of it, but I had it, like a decent amount. I was like, whoa, I just went green. But as I said,
it gave it all back, though. It gave it all back in 2 days. So you got out on some of that, on that pop. You were able to get out.
Oh, yeah. No. That day when I saw it, I was like, holy cow, I have something in the green. So I sold 50% of it right then. I was like,
I do the same thing on the bad days. I'm like, oh, some green. I get that money out of there.
That's exactly right. I'm like, oh my God. I sold 50% of it. She told me not to. She said, it's a dumb move, but I did it. And
it's a smart move.
Whatever.
Smart move, Jason.
No, I just
give it back.
No, so I just I got a little bit handed to me in the sense of, Wingstop. I like Wingstop as a long-term hold because I think it'll continue to do well. But here's what I want to say. I had call options on it. I still do, actually. They're like June call options. I was up like 300% on them, and now I'm down like 100% on them. Okay, and I have a decent amount, so I had enough that I could have taken 50% off when I was up 300%. Yeah. And it was me getting cocky and saying like, oh, the earnings are going to kill it no matter what. I know it. But you never know. It's like, even though when I was so confident on Upwork, they could have had a bad quarter. They could have had an accounting thing. You never know. And so to Dennis, you're talking about KMPH. I sold 50% of it because you just never know. Yes, you go back. Dennis and I would talk about how we were so mad we didn't hang on to more of whatever in the past. But the truth is, when the market goes straight up, it's always easy to say that. But when the market starts to take hits, you realize, okay, there's a reason why you would sell. There's a reason why you would trim. And so I'm annoyed at my Wingstop because I was up so much money on it, on my call options, and now I'm down, and I'm just like suffering through it. So that is something I just want to say it's okay to trim some winners. Joel had a talk with me about it with Tesla. 4 weeks ago, I came on at 864. I mean, I can show you my things. I sold at 871, 864, 850, and I haven't sold Tesla in years. But I only sold 10% of the position. I bought some puts, but I only sold 10%. So I'm still very long Tesla. Yes. Okay. They want to know some of my picks. So TRSSF, I still own. I don't own PHUN. I'm not. That's Funware. I don't even know why. I didn't think I said that. BTN, I still own. BTN has great management. It's going to take some time on that one. It's not. It's like it's from my friend Brian. That's the one. He gave me that one. He's the guy that also gave me QRTA and a couple others. You guys know he gave me TAST. That's so I believe in Brian. Okay, so that's that.
Are you buying like anything actively down here? Like we've had a significant dip. Are you looking at, I like this one. I've been eyeing this stock for a while and taking advantage of some of the cheaper prices?
Yeah, so I'm starting to, Dennis. I wanted to clear up my ones I didn't like as much. Like I sold CLSK. I sold a lot. I mean, like I said 3 weeks ago, I started trimming, but I didn't trim enough, right? So now I'm going to open this. I bought, I was just going to say I bought something, but I actually bought a put. So that's not a good example. What I buy, I bought a SPY put as well. Let me see. So API I picked up a little bit. Some long-term calls on it. I almost picked up some Peloton yesterday, but I didn't yet. I thought maybe it'd hit in the 90s. Also looking.
Are you still in Peloton? Like, are you still long your other? You're just adding to it.
Yeah. I didn't buy. I put a limit in for that. Did it go? Did it hit 94? I put a limit order like 96.50. I have a limit order. Yes, I'm still long. I sold my main Peloton, but I kept 100 shares just to ride it. What else was I looking at?
Aren't you the pandemic's over? Don't you think it's because I wanted to dump it. We still got our whole position. I wanted to dump it at 130. No, what do you think? The subscription thing? I mean, actually, I refused to get on the Peloton until today, until we sell the stock. But I needed to work out today, so I got on the Peloton.
Joel, I know your ranking's going down, man. It's like you don't work out at all. So that's I like the social network of it, and I thought you worked out harder, but
I swam yesterday. I've been swimming again. I'm back in the pool.
It doesn't count. It doesn't count if you're not on the Peloton.
Okay, go ahead. I don't know. I just think it's pandemic stock. Dennis talked me out of it. I don't know.
I mean, aren't there variants of Corona? Like, is it? Are we really out of the woods? Is it really?
No, that's a good point. That's a good point. I don't think Peloton's going away either. It's just the valuation's never, I bought it back at 25 and at 25. I bought it similar time you did. I just sold at 40 because I thought it was overdone at 40. I think it was going to 170. So I don't have the diamond hands. Yep. I have the opposite of diamond hands.
You know what? Here's just the thing, Raz, before you move on to this.
Paper hands.
It was, and this is the thing. And if you could jot down this note and keep an eye on it. She picked up some more right here in this area, right? And I didn't put the order in, and I was like, oh, we got some more, and then this was earnings. This is what when you have a stock like that and it has an earnings pop and then it gives it away, and it was a good report. I knew I was toast then. So I said, when are you going to worry about it? She says 130. And then I talked to her, what about 130? And she goes, I'm not a day trader. So I'm like, so there it is. But anyways, I don't know. I like to see it come back. But sorry, Raz, go ahead.
No, it's okay. And Peloton could have a competitor, but it's a network effects. It's a network effects. They have the network. So I'm not really worried about competitors right now with Peloton. But I did I sold some more GAN. I mean, let's say I had 1,000 shares come 3 months ago. I have probably 600 shares or 500 shares. Good. When it hit 28, 29, I trimmed. I told people I did that. I did. Asana, same thing. It was at 36, 38. I trimmed. I've been saying this for 3 weeks that I wanted some dry powder, and I realized Dennis realized too that he had too much SPACs, and he trimmed it this week, beginning of the week, and I heard him say it. I'm like, let me go look at my SPAC allocation. So I did a little bit of trimming there. I'm not out of the market. I'm not saying the market's bad. I'm trying, like Dennis or Joel asked me, Am I looking for opportunities? Yeah, I'm looking for opportunities. So that API is an opportunity. IMMR could be an opportunity. The BTN is potentially an opportunity. Some of these guys love this stock VISL. I don't understand it. I didn't buy any more of it, but I'm researching a little more. There's the KMPH. Suppose there's still a lot of good stuff with that. I'm looking at that. I'm looking at some battery stocks, AQLMS. I bought TAP. Chris Camillo's loving it because their new energy drink. So I picked up that one, TAP.
That's interesting.
Yeah,
all those charts were just going. I was flying through the charts.
You can go TAP. Dennis, TAP is probably the one you could look at.
I mean, with stabilized, and it actually is, it's a reopening play. I would say Coors Beverage is a reopening play as well.
Yep.
I don't mind this chart. Actually, all those ones that you just looked at, a lot of those are broken charts, but this one is trying to hold on. So
institutional buying down.
Yeah. Well, and you know what? I don't know if they cut the dividend. Were they one that cut the dividend to zero? I think it still is a zero, but eventually they probably reinstate that dividend. I think they had a dividend before. I'm pretty sure they did. So I see it's zero now. So they probably cut it during COVID. Where everybody cut their dividend.
So I bought some call options, Dennis, for June, and I bought stock. They have some new stuff coming out that could be competitive to some of the biggest players in this these new kind of energy drinks. So and they did cut the dividend. What is this Beachbody thing? People keep talking about Beachbody. I don't know it, and everyone keeps. I see someone in the chat right now talking about it.
It's a SPAC. Well,
what's the symbol?
It's going public via SPAC. What's the symbol?
That's FRX. That's the Shaq SPAC.
Thank you, Mitch.
That's the Shaq SPAC.
Yeah, someone told me yesterday the Benzinga Pro affiliate program should be like Beachbody, where they have I guess it's like a network thing. It's a big network. So all right, I know I'm getting off since we have a guest coming on, but there was a couple things. You guys, I interviewed Kathy Wood earlier this week. Kathy Wood from ARK Investment, talked to her as well. The Jim Cramer, Kathy Wood fight or argument or whatever is getting a lot of love on YouTube. She's getting a lot of support when, Jim Cramer told her to close her ETF. I don't know if you haven't had a chance to check it out, go to Benzinga's YouTube. We tried to ask as many questions and stocks as I could. I know I missed Peloton. I know I missed Palantir. I didn't do Palantir for a reason, though. If you go look her up, you can see that she talks about Palantir a week ago for like 15 minutes. And I knew if I asked about Palantir, it'd be a long answer and I would miss 4 hours.
You did your research on this interview, Raz.
Oh, Dennis.
You were doing your homework, man.
Dennis, I had an earpiece in my ear from like 5 o'clock that day, the night before, till 11 o'clock. My kids were like, dude, do you ever take your phone out of your ear? And they just didn't understand what I was doing. I listened to everything you could possibly listen of her. So yeah. I know her answer on Palantir. I can tell you the whole answer. My fear was if I asked that question, it'd be a 6-minute answer. And so
she loves Palantir.
Loves it. And then, Chris wanted me to ask about Camille. She doesn't own Peloton, but she used to. And there's a lot of stocks she does. But you guys, I don't know if you saw when I asked about stocks. I named like 10 stocks at once. It was pretty funny. But just the minutes kept going so fast. And I was like, come on, clock, slow down. And she's like, Jason, if you can invent that, I'll pay you whatever you want. Did you guys see that Chamath sold his Space Holdings, SPC?
I wanted to bring that up.
Do we know why?
If we had time.
$200 million. He didn't. I didn't see if he. I don't know if Spencer pulled it up on Twitter yet.
Did he say why?
You want to know his average price was $34.32
that he sold.
That he sold at.
Hey, Matthew Brandt wants to know what the Benzinga IPO. I did talk to a guy who took 3 companies public last night, and he was trying to convince me that if we took Benzinga public, we'd have a lot of investors. I don't know if that's the case, but that's just what he's trying to do.
SPAC.
That's what he was trying to convince me, a SPAC or take Benzinga public. I'm like, well, how do we know if people will invest in the company? I don't know. Like, it's kind of weird to me. But
and I'm sure you want to have all those accounting meetings and everything to do that kind of stuff, right?
No. Joel, you know how I feel about meetings. If there's more than 4 people, I don't go, right? So when they have a board meeting, I'm like, I don't do that.
Or he goes and then finds a reason to leave.
Yes. I got to go to the bathroom. All right. I'm pretty excited for your interview coming up, Spencer.
Yeah, we've got David Gandler here in the background. I'll bring him on in just a second. David Gandler.
Before you kick me off, can I say follow me on Twitter at Jason Raznick. And if you use E-Trade, let them know to add Benzinga News and send us an email to powerhour@benzinga.com. We'll send you a T-shirt or track jacket. Make sure to include your address, name, and size if you wish to opine. I sound like an old guy on TV. All right, guys.
If you wish to opine. All right. Thanks a lot, Raz. Guys, smash that like button for Jason. We appreciate that. All the likes, all the comments, all the super chats. Thank you very much. Let's bring on our guest now, David Gandler, CEO of Fubo. David, thanks for joining us today. Good morning. Oh no, can't hear him. Oh. We've got a mic. We've got a mic.
Can you hear me now?
Yes, we hear you now. Excellent.
Thank you for having me, Spencer.
How are we doing this morning?
Excellent.
All right, let's start with the news from the other day. The deal with Caesars.
Yep.
Tell us about that. What exactly does this integration look like for Fubo?
So, well, the deal with Caesars is really just a multi-state market access deal, right? So you have to do these deals because all of the regulation is on a state-by-state basis. So, during our earnings call, we announced our market access deal with Casino Queen in Iowa. This is sort of an extension going into 2 more states. So our goal for 2021 was a minimum of 3 states. So here we are, right out of the gate.
So what? And that's sports betting is going live on Fubo when like Q4, right?
So our book is so if you've been following us closely, November 10th we decided that we were going to get into the wagering space. We didn't know if we kept the optionality for ourselves to either do a partnership with a sports book or go it alone. And I recall Laura Martin asked me. She said, "Well, what do you think?" And I said, it's a big project, as you guys know. 2022 seemed like the right time. And then, once we felt comfortable with our ability to execute, as you know, we know the sports space very well. We're a technology company. And I think we've demonstrated over the last 6 years that we move very quickly. We ended up with 2 very quick M&A transactions, 3 licenses before the first quarter's up. And now we're saying we're going to launch a sports book in fourth quarter. So well in advance of kind of what our plans were initially.
What was part of that though? Seeing what your competitors were doing. This DraftKings this deal was announced earlier this week as well. So did that factor into things? You felt like maybe you're falling behind?
Well, I would actually say it's quite the opposite. I've been saying for a year or more that we felt that we sit at the intersection of 3 mega trends, and people have said many times that this doesn't make any sense. And so the deal that you're referring to, in my opinion, validates what I have been saying for quite some time. In my opinion, I think we're actually ahead of the game because, to truly build the right experience, you can only do it under one technology platform. I believe that it's very difficult to have 2 different companies collaborate. That's not to say that it's impossible, but again, where you can't share data. The book may not know what the video customer is doing. The video customer doesn't know what the book is doing. This way, we think we can build an end-to-end solution. So, in my opinion, again, it's first of all, it's not a zero-sum game. The 2 companies you mentioned are great. I think Jason Robbins is an amazing guy. I know him, but like I said, it's not a zero-sum game. And you guys know this. Canby's report came out. I think it was last year. With the average customer has 4 books on their app on their phone. So. It's not either or. I think there's an opportunity for us. And, we have one of the largest sports packages online. So, but again, for me, that was validation.
What was up with this FuboBet.com thing? What was that about?
So first of all, I want to put a pin into this one. So notice on the earnings call, I mentioned Fubo Sportsbook many, many times, specifically, not FuboBet. That is a splash page that we put up November 30th of last year to test colors and to test name. And that page is Fubo Bet. And notice I've been talking about Fubo Sportsbook. So we came to the conclusion in January after multiple tests around that page that colors and the word bet is probably not the best thing. And Sportsbook made more sense. I think the situation that you're referring to, we were in the middle of earnings, and I think the question was, is this official? I think the miscommunication was this was not an official launch versus not being official. Now, that page has been up since November 30th. I have no clue who, what, when, where, why decided to put that page up. So,
okay, so official in the sense that, yes, it's from Fubo,
It's not an official launch.
But it's not the launch of anything
Right.
new. Okay.
Right.
There was some weird stuff going on around that. So,
yeah, which doesn't surprise me. Sometimes I get people calling me saying, I heard this, I saw that. I'm like, guys, our job is to deliver results, and we've raised guidance 3 times. We crushed our net additions for the fourth quarter relative to our peers, both traditional and virtual. We said we were going to do wagering. Track record that we move quickly, is once again proven with our ability to move quickly on the wagering side with these deals. So that's what we're focused on. And, we're very happy with our results, and I'm extremely bullish on the future of the industry and the business.
So one more thing before we move on the sports betting. When is the target date for when people will be able to wager directly on the Fubo platform?
Yeah, so we have a target quarter now. The target quarter is fourth quarter. The reason why we cannot give you a target date is because we just completed our deal. We closed, I think it was on Friday. The Victory team, who I'm super excited about. These guys are the real deal. They're flying in on Monday, so we'll have all of our prep meetings and strategy. And the good news is we bought a functionally, it's a functioning sports book, right? So it's just pre-revenue, which is exactly how we like it, because it gives us an opportunity to actually further develop it in a way that we want, that makes sense for our video product. So fourth quarter is what I can tell you. That's a pull forward from what we've been saying, which I think was end of December, potentially first quarter 2022. That's good news. And as we get closer to fourth quarter, we'll obviously provide you more clarity around that. So, but again, we're moving very quickly. You have to go through regulation. You have to actually submit your app to the regulators, so that they have to take it through like a 6 or 7 week process. So that's the reason why it's difficult for us at the moment to say what is that exact date. But I do anticipate sometime end of second quarter or early third quarter, we'll probably have a more definitive timeline.
Moving on to other areas of the business, your subscriber growth grew a lot last year. Your revenue grew a lot, but your losses widened as well a lot. Is profitability, is narrowing those losses a priority right now? And if so, how do you do that? Yeah.
So I want to be clear that I'm answering the question. Are you referring to the 570 million? Or the $2.42 negative $2.50?
Yeah. Yes, that's what I'm referring to, the negative EPS.
Yeah. So this is one of the things around our business that it's important for me to meet with people like you and communicate, because you have to be very careful. You have to look at the details of our financials. Most of that loss is actually based on a revaluation of warrants. So these are a lot of non-cash items. We took an impairment on Face Bank assets. We wrote down 250 million or so. Again, you can kind of go through the filings. So, and then there was about, if I'm not mistaken, about $50 million of stock-based compensation. So the losses are not as excessive as it looks, based on the way we look at it. So
right. That was a big chunk, but that didn't account for all the losses, right?
No, of course. Look, let's be clear, gentlemen. This is a 6-year-old company. It's not Roku. It's not 20 years old. It's not Netflix at 24 years old. It's not Spotify. This is a company that is moving quickly, that has been very efficient to date. The actual cash burn rate, I believe, was somewhere around 200 or below $200 million. So, to get in a business like this, and you guys know how expensive the streaming world is, we have done an amazing job getting this business up and running. With very limited capital. We've been excellent stewards of capital for our shareholders. And, look at the way we've approached wagering. There's no $300 million M&A transaction with significant integration risk. We do things in a way that we think is controlled, minimizing risk, and allowing us to move very quickly and do it in a way that, allows us to continue to A/B test and iterate, which is our playbook.
As far as your subscriber growth, revenue, almost half of that for last year came during the fourth quarter, which was also when we had this like once in a lifetime sports calendar, right? Because all these sports that had to stop in the pandemic, and they all came back at the same time. So how do you see that going forward? Because that was almost half your revenue last year, and we're never going to get that situation ever again.
Okay, so let's just be clear what we're saying. This was the commentary around Q3, not Q4. The commentary around Q3 was there were no sports through June, right? Correct me if I'm wrong.
Yeah.
And then Q3 was this massive quarter of all these leagues, the NBA, the NHL, the NFL, all coming back at once. And I think the narrative around that quarter was, okay, you had an awesome quarter. And, you know, it's not going to happen again because it's just a once in a lifetime situation, as you just described. However, let's fast forward to Q4, and I can just walk you through the numbers. Ad sales revenue went from $7 and change to $8.47. That was up significantly. Contribution margin normalized for Q3 was about 10.5%. We finished the year with 11.7% contribution margin, which will ultimately be our gross profit once we get through the minimum guarantees, which I believe are some point in June or July. And that's why we use that adjusted contribution margin. So when we flip it to gross profit margin, you can actually look at the historicals on an apples to apples basis, where it's just straight variable. And then when you look at the subscriber net additions, I mean, this is a very, very important point, right? Buying stocks and looking at companies is about looking forward, right? Not backwards, right? Our job is to extrapolate and build. And so what I'm very excited about is that special quarter that you're talking about, Q3. We actually netted about 11% of net additions from the virtual MVPD space. And in Q4, that number was actually 18%. Okay, so if you're saying we benefited, not you, if you know the pundits are saying we benefited, well, and many of them are saying that we have the same package, or which we don't. But let's just say we do, then why didn't everyone benefit the same way? So what we've established ourselves as a true sports player, that is underscored by our net additions for the fourth quarter. It's underscored by our ability to raise prices, because we raised prices to $65, just like everybody else. And we had the same sports calendar and benefited the same way as everyone else. So that should tell you that we are actually executing very well. And that's why I'm extremely bullish going into 2021.
I think Joel had a question. Joel? Oh, wait, I muted you. Sorry, Joel. 1 second. There we go.
We're on the line with David Gandler. Oh, I didn't say Gambler there. Fubo CEO.
Well, now you say Gambler now, right?
Sorry, man. I'm sorry.
Betting space. So.
My bad. The Fubo CEO joining us here on Benzinga's pre-market prep show, a little extended show. David, I can't help think about the circumstances over the last year and the pandemic, correct? I know it hurt your business as far as, you know, having the sporting events, but isn't there a boon to the online gaming just from the fact that, you know, people can't go to games and, you know, and spend the time and tailgating and doing everything. And I know it's impossible to predict when that's going to happen again. But do you see, you know, that possibly having a negative effect on your business when people start, you know, returning to stadiums? Because I just, for me, I mean, I go and I cheer for my team. I can't see there being on the game and being on the phone and gambling.
I know.
Talk about how the pandemic, how you adjusted, and then also moving forward.
Okay, so let me unpack this for you. I think this is a great question because are you a Yankees fan? Are you in New York, or where are you based?
I'm a Yankees fan. Joel's not, but I am.
Okay, so let's play some trivia here. How many seats are in Yankee Stadium?
40,000, around 50, maybe high 40s.
Okay. So how many people, Joel, this is not a trick question. How many people across the United States can you jam into Yankee Stadium 120 days or 120 games? Like, you know, you're only going to go see 1 or 2 games a season. I don't think you're the guy that's going to go watch 80 games or 90 games in a season. So my point is that you're still going to need access to your games, and you're going to want to watch it on your smart TV. And so the only thing that I believe will happen is that when you go to that game, I've got an opportunity to actually allow you in one interface to continue to place bets, to do prop betting, to think about micro markets. And by the way, Spencer, to your point about why it's important, to my point about why it's important to do both of these things under one roof. Think about, something that's going to be big very soon is the micro markets, right? Betting, prop betting. Think about when you know what people are watching and you know what kind of bets they make, and now you can create your own markets, specific and unique to what's happening in your ecosystem. Right. So there is a huge opportunity to differentiate here. And I think when stadiums open up, it's actually going to create more value, because I think what the pandemic has done for sports is that you kind of been living this life where you're at home, you're taking care of your kids, you're doing all these house chores and you're trying to do your job. And you kind of sort of forget that there are sports out there, right? Because you're missing that sort of your normal day where you go to work, you've got weekends. And it seems like last year was just one long, long day. And I think that once things normalize, I think you'll start to see improvements in engagement around sports. Now, last thing I'm going to mention is, and I think, Joel, you said, tell me about going forward. Look, our numbers in our viewership hours in Q3 were about 121. You saw us announce 127 hours of viewership in Q4. And, I'm very happy to say that, when I look at January numbers, they're starting to creep up above 130 hours. So, again, that's not to say where the quarter ends, but to me, I'm very comfortable that while you do have a pandemic, I think people are going to be splitting their time and using their time differently. But I do not believe that they'll stop watching the amount of television that they have been watching, at least with Fubo. That's not evident to me in the data that I've seen, at least in the early indication.
Okay, one other quick question for you. This is kind of like a sore spot in my heart, because were you ever familiar with the Trade Sports platform?
No, I wasn't.
Okay, this is back in the early 2000s. I was a buddy of mine. We actually developed a betting platform.
Oh, wow. Okay.
For intra-game wagering.
Okay.
Do you guys offer anything like that? Or, it was the 0 to 100 probability and you can trade, and it'd be a basketball game and the shot would go up and everyone would pull their markets and then the shot would go in and it'd be a new market. Are you guys, for intra-game wagering, are you guys making any plans to enter that market?
So first of all, we are not yet regulated. I just want to make it clear. So there's a couple things. One, we are not yet regulated. Our press release that came out yesterday was we have a deal with Caesars subject to regulatory approval, so we have to go through that process. The whole point of this, Joel, is to actually do what you're saying, which is to take all of that data. This is not about who won the game. This is about, who's going to hit the foul shot, who's going to score the penalty kick. Is he going to pass more than 200 yards today? Is he going to throw an interception? That's the kind of stuff that I think is going to create that level of engagement to further drive retention. But the more you watch, the more advertising revenue. So for me, this was a very natural play for our video product.
David, one more. I don't want to keep you too much longer, but there's been a lot of bearish criticism of Fubo, whether it's from Rich Greenfield or from Kerrysdale Capital. What don't the bears understand about Fubo?
So, well, let's just lay out the facts. You just mentioned some of these reports. I try not to read them because my job is to focus on strategy and focus on the business. Some of the things that I've heard, I don't know if it's true, you guys can keep me honest, is that, I've heard things like their downloads collapsed in December. I mean, some of this stuff is actually just fake, and it's not even sourced. And, my job, again, is to deliver results. Guidance increased 3 times in 3 quarters, hitting all the numbers that we talked about. We went through a roadshow. We delivered on everything we said we would, and that's why analysts that are covering it, are I don't want to say super optimistic, but it seems from what I've read is they're optimistic. Obviously, not as optimistic as I am, and I think that there's a lack of understanding in the business, and I honestly don't think there's anything that we can do to get some people to change their minds. I think you guys know that. So we only focus on what we can control, and if investors believe that there's an opportunity here, that's their call.
And our chat is asking us, how do we get Benzinga on Fubo? That's from our chat.
Well, yeah, you have an in, right? So I think, look, as I always say, there are capacity limits in the virtual world.
Yeah.
So, if you guys send me a T-shirt, that I can share with the team, not for me. I'd like to, position you guys as sort of, the leaders in the space, and we'll get you in front of the licensing team.
David Gandler is the CEO of Fubo. We appreciate your time this morning. Thanks a lot.
No, thank you, gentlemen. Great questions. Have a good one.
Appreciate it. All right. That was a fun, extended show. Thanks a lot to David Gandler and the people at Fubo. I saw a question in the chat. So hit that like button, guys. Hit that like button. Hit subscribe. We appreciate all the questions. I saw a lot of them. I know, we didn't have a ton of time to get to all of them. There's some I wanted to ask that I didn't have time to get to, but we appreciate his time, and I hope you guys enjoyed that. So hit that like button if you want to see more executive interviews like that. Somebody asked about what we're doing today as far as the all-day stream. This show is about to end, and we're going to go over to get technical. We're jerry-rigging every stream to each other. So it's a separate stream, but this stream will end, and it'll redirect you automatically to our next show. So don't worry about that. Joel, any final thoughts before we go?
Well, we're ripping. We have just
look at the spot.
Yeah. I mean, this is just they're loving the unemployment data.
Wait, pull up the S&Ps or SPY.
Sure, I will do that. No interest rate worries whatsoever today in the market. Good to see a good jobs number. I'll just share the screen here, and I'm almost out of numbers here on the upside. About that.
Bring it back. We lost it. Bring it back.
Screen share. Yeah, a little off of my screen share today. Say hello to Wednesday's close. Wednesday's close was 1675. I'm sure a lot of people would like to see that. The high from yesterday was up at 42.25. That's another 35 handles. We get that all the way back down. I think people would be very happy. We've already traded the average daily range. So follow through for that pre-market high, but don't get too pig ahead after that. We've already had almost about an 85-point range, which is bigger than usual.
All right, guys, everyone smash that like button once again. We appreciate that. There's a bunch of places you can go. In the description of this video, by the way, we got links to our Discord chat, links to our swag store. If you have a particular opinion as to which piece of swag we should send David, let us know. PreMarket@Benzinga.com. We can make new swag as well, but swag.benzinga.com is the link to our swag store. Our Discord is in the YouTube description. We've got links to Twitch, our newsletters, Benzinga Pro. It's all there. If you're listening to the show via podcast, please remember that all the information from our show is meant to be used as informational purposes, not for investing advice. Thanks to both our guests today, both David and Jason Raznick. Joel, I'll see you in the afternoon. All right. So as I mentioned, this stream is going to end, but it'll redirect automatically to Get Technical with Neil, which I think they already started. I'm not even really sure, to be honest with you. I don't really know what's going on there. But the real Get Technical show will start at 9:30. I think sometimes they start a little early just to kind of hang out and shoot the breeze before they open. So when the stream ends, it'll redirect you automatically. You don't even have to do anything. Just click play on the screen, and you'll get redirected to our next show. We are doing a continuous all-day stream on Twitch and Twitter. So it's just one nonstop stream, but for YouTube and Facebook, every stream is going to redirect automatically, or at least on YouTube, it'll redirect automatically to the next stream, so you don't have to do anything there. Okay, I think that was it for housekeeping items. Yes, pretty sure it was. So once again, I will just say, smash that like button. We appreciate that. Everyone have a good rest of your day. Good luck in these markets. I'm going to cede the floor now. Yeah, you know what? That's a good one. Psychotropic trader. We should send him a shirt that says David Gambler on it. That's good, actually. I think we might do that. That suggestion's in the lead so far. Okay, I'll say that. That suggestion's in the lead. Okay, got a full day of programming ahead. Got a full day of trading ahead. Markets are going to be interesting. As Joel said, we are rallying here. We just crossed 380 in the SPY. Going to be watching that like a hawk today. Everyone have a good rest of your day. Good luck in your trading. We will see you later on. You can watch Get Technical. I'll see you later on at 10:30 for the Benzinga News Desk update. And Joel will be back at 3:30 Eastern Time. Everyone have a good rest of your day and good luck.